The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Bryan from Keep Trading Simple, and welcome to our special session today. So today's special session is a little bit different than what we normally do. I've done a couple different recent webinars for you guys where I have done kind of strategy-based sessions talking about different things you can trade inside of the markets. And today, we thought we would put together a special session on really Q1 in 2020, and then what we have to look forward to in this kind of next coming wave of Q2, since we're at the very, very end. A lot of stuff has happened this year. This is probably, since I started trading, this is probably the most, not only volatile, but honestly craziest time ever. It's something that just a second ago, I was talking to the gentleman from Nadex, and we talked about this is something that our generation will forever remember and talk about. And absolutely, without a doubt, we definitely will. So going forward, let's get crazy here. Let's dive right in and make sure we get this all started. All right. Make sure my settings are good. All right, there we go. Across the board, we look like we're good. All right, so first things first, analyzing the markets Q1 2020, and then a look ahead is what the name of it is. For those of you who don't know me real fast, I'm the president and CEO of Keep Trading Simple, and my mission is really to simplify trading to help remove the distractions that professionals throw out there for a lot of people. Trust me, there's a lot of distractions outside in the market right now, and a lot of people that are talking about a lot of different tools and resources. And unfortunately, because of the volatility and things like that right now, they are absolutely not working. So again, let's take things back. Let's go back down to a fundamental basic level today. And that's what I intend to do, go through some charts, look for some areas that I'm looking for reversals, as well as support and resistance zones, and we will talk about those. For those of you that may recognize the name, I've created a number of different programs that are traded specifically for Nadex. You guys have heard of my news trader, you've heard the 30-minute trader, you've heard the 5-minute binary courses, you've heard the parabolic retracement we did a couple weeks ago. Done a number of different things. I'm always constantly testing new strategies and things. Just absolutely love the product in general, and again, I love everything associated with trading, so I spend a lot of time in there. I did work for one of the advisory divisions of the big three banks. I have friends in that arena, and it's interesting, like, oh my God, what am I gonna do? And it's funny, I got into advising right after the last market crash, and it was interesting. I learned a lot about being in that environment. And again, understanding the trading sides of things and understanding that we can profit from ups and downs. It definitely, market crashes don't necessarily bug me as much as they bug a lot of people. My wife actually works for a financial advisor. She's almost fully certified for it as well. And a lot of their clients are obviously calling and panicked and, oh my God, what's happening with the market? Should I cash out? Did I do this? And it's interesting hearing and again, seeing the panic from the other side of the equation. So again, for me, markets, it's going to go up, it's going to go down. I'm not necessarily worried about it. And I'll cover that, kind of today. I did spend some time traveling as well. That's actually where I met my wife. These are my two boys. It's unfortunate for them. Their 10th birthday is in 19 days. And man, the schools are locked down, the team's locked down, and a lot of kids are missing their birthday parties this year. So it looks like summertime is going to be a popular birthday season for everybody. Obviously, like many parents, I'm also doing the homeschooling thing with my parents or with my kids right now. If anybody's going through that, I feel for you guys. It's definitely more challenging than you thought. Many respect for those teachers out there that are, also home right now during this time. I love teaching, but teaching my kids is definitely one of the most challenging things. So again, a lot of respect and a lot of appreciation for the teachers out there that teach our youth. So with that being said, guys, let me jump right into the disclaimer. So trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile when investors risk losing their cost to enter the transaction, including the fees. The information presented within this presentation today is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and, again, at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including forex, stock index futures, and commodity futures. All right, now Nadex is a registered trademark of the IG group. And again, there's your copyright date. So what are we gonna cover today? Let me click this. There we go. All right, so here's my agenda for today. And actually, this last one right here, I need to remove real quick. We actually pushed this off for one more week. For those of you who don't know, this is actually gonna be a weekly occurrence. Not Q1, obviously, but next week we're gonna do an analysis session for you guys as well. And I will most likely put that last number 7 in there. Anyway, what we're gonna do, I'm gonna start off by giving you kind of a summary. of what has happened. Now, the diagram over here, the picture, is exactly kind of what Q1 looked like, right? We had the ascent to the peak of the mountain, and then we fell all the way back down again. So again, I'm going to give you kind of an overall summary. I'm going to use some economic numbers and talk about what the markets have done during this time frame and things that we need to keep at the forefront of what's happening. Because as far as I've been told, kind of the whole crisis, the pandemic situation that we're in right now, this is, for lack of a better word, it's temporary. We will eventually move past this. So it's important to understand about what was the environment like before all this kind of kicked in, because we will get back to that time eventually, right? And then that's where things can get a little bit interesting. Number two, I need to bring up rate cuts. Okay, now these are not just US rate cuts, these are rate cuts around the world. Okay, and it's important to understand because again, the world is a global economy. We need to focus on what's happening in the world, not just what's happening here, right? I mean, we all know this virus didn't start here, but it found its way here and it's affecting, I think, what, 150 countries right now? Understanding the rate cuts across the globe are going to really kind of give you a big kind of bird's eye view of what's happening on a global level. And it's important to understand because, again, exports, imports, supply chains, I mean, for those stock traders out there, guess what? Earnings. Okay, earnings are global at this point, all right? Then what I'm going to do is I'm going to dive into some charts. We're going to talk about commodities first, then indexes, and then we'll cover forex. I'm going to break down about 10 different charts. We'll talk about where they are year to date, what they've moved, kind of top to bottom, high to lows, and then I'll dive in and talk about some levels that I think are a bit important to be looking for potential reversals, right? Then I want to go into notices. And this is a section I want you guys all to pay attention to. It's something that I know that notice is there for Nadex, but a lot has changed due to the increased volatility and basically the average ranges during the day. It's a lot of people don't know about this. It's very important that you guys know where this is at, know where to find it, and keep up to date with it. We've just had a lot of changes that actually kicked in at the end of last week, the 26th and 27th. In 2 weeks, if the markets close down, or not close down, but if they slow down back to normal areas, those all may change and they may go back again. So again, it's a very, very important area that, I don't think I've ever talked about it on here. And I've seen, again, I knew it was there, but I very rarely look at it. I mean, how many people, when they first load up their Nadex platform, that pop-up that tells you about kind of what's happening this week with rollovers and everything else, you just immediately close it down, right? There's some very, very important information that you guys need in this notices section. Again, that's about the going forward area. All right, so with that being said, oh, you know what? Let me see, let me pop this out real quick. What is your prediction on the jobs report tomorrow? 4 million? I'm gonna actually get to that. That's, Brian is already jumping ahead on me. All right, Brian, so here's the thing. All right, so let's talk about the US unemployment rates thus far this year, okay? Unemployment, actually, Brian, great question. Unemployment rate is actually more what I mentioned this week than the unemployment number, okay? The jobless claims doesn't necessarily matter to me as much because now that the stimulus bill has been provided and there's actually been some backstopping for companies to not fire employees, I don't think the jobless rate or the jobless report, the claims are as important. But this is what the unemployment rate has looked like thus far. And again, this is the percentage of the total workforce that is unemployed and seeking employment, right? January, you can see we were, coming back in. Let me see, where's my cursor? I don't know if you guys can see this over here. You guys can see January 10th, the actual, again, starting off the bottom, the forecast was 3.5. We came in at 3.5. Historically low, right? Extremely low, almost to the point where it's just not going to drop any lower than that. Employers are starting to complain that they're unable to find qualified job applicants, getting very, very difficult. Basically, at a full employment level, right? February, it ticked up a little bit, but really not that much, right? I mean, it was supposed to be 3.5, came in 3.6. Now, the coronavirus had already hit at that point, right? We got our first case at the end of January. Okay, no surprises. Looking into March, right? March 6th, beginning of the month, we obviously, at that point, we've had some coronavirus cases. And you can see that the forecast was 3.6. They expected it to stay, and it actually went back down to that 3.5 number, okay? Now, since that time, we've kind of gotten more into the general kind of COVID-19 kind of infection rate area. Okay, a lot of places are stay at home. I know for me in Maryland, where they officially went stay at home, although we had basically already been at that stage with all businesses except essential businesses closed down. So the unemployment rate, again, I expect there to be a huge surge in the unemployment rate, okay? Now, in my opinion, does this unemployment rate necessarily matter? And the answer is no, okay? The number is going to be high. Everybody knows the rate's going to be high. But all those businesses that are open, the ones that are able to survive through this, they're going to need to hire people back immediately as soon as this is over, okay, as soon as we get those things. So it's going to be a temporary big hit, and here's where the reaction for traders is going to kick in. when people see that number and it's a very high percentage, the market is kind of probably already priced it a little bit, but the retail trader is going to get very, very nervous. They're going to say, oh my God, the world is ending, the sky is falling, we're at 20, 25% unemployment, okay? Now, the one thing about this is, again, it's the percentage of total workforce that's unemployed and actively seeking employment. How many, again, the actively seeking employment is the big question. Okay, again, a lot of people are going to be scared. A lot of people are not wanting, they're not wanting to leave their house. They want to be staying at home. So, again, that's going to be kind of the factor that's going to be involved here. So for me, this is the most important thing to look at. And again, going further, into the future, into the summer, and Q2, Q3. Okay, this is the biggest factor I see is how fast we can get back down to that 3.5%. Okay, we were able to get down to that level once. Again, there will be a big boom. If you guys look to see what happened with World War II when the industrial power of the United States went absolutely crazy, that's what our economy is doing right now. Industry is chipping in. People are, again, as a nation, we've come together and we are driving forward. And again, we are producing what needs to be produced. This number I can see, again, being very, very huge this week. And again, this number is on Thursday. Going forward, that's the numbers I'm looking for. So again, I expect a bad result here. I do expect again, it's how fast we can get back up to that in the future. All right. I was wanting to trade on that economic event. And again, trading on what? The jobless numbers? Yeah, again, I'll mention that in a second. So non-farm employment change. Again, where were we before the kicked in? January 10th, you can see the forecast was 162. We came in a little bit light, right? In January, we only hired 145,000 people. So we're a little bit light. But going into February, again, COVID was here, right? It hit in the middle of the end of January. The forecast was 163,000 new jobs. We had 225 jobs. So look at the rate that we were hiring, faster than what actually the forecasts were. Looking at March 6th, we were at 175. Now, again, this is that peak that I was talking about, right? That mountaintop. March 6th, COVID was definitely here. March 6th was really, that was beginning of this month. The schools were starting to get to the stage where it's, hey, listen, do we need to shut down? How serious do we need to be? We need to limit things. There was 273 new people, right? New employed people. So again, the economy was still pushing forward and growing, even in spite of kind of the fears of everything going on. So we know what this number looks like now, right? We know how bad that number is going to be. And actually, that's the next slide. But what was the economy doing before this hit? We were driving forward, even in the light, knowing that things were going to get worse. So again, Q2, can we see this non-farm employment change? Can we see the resumption of economy growth, jobs growth? The answer on a positive note, in my opinion, is yes. Obviously, we're going to have this big initial hit right now as people are told to stay at home, do not work, do not do anything else. But right now, most of the models, and again, this is on the good side, hopefully, right? June, July, somewhere in that time period is where we should see the very, very tail end of this. And then what happens? Then it's gangbusters, then it's people hungry. So again, there is some positive light at the end of this kind of tunnel, right? Now, number 3 is kind of what you're asking for, the U.S. unemployment claims numbers, right? The jobless claims. So last week we had an absolute, or again, March 26th, we had an absolute huge unprecedented 3.2, right? And again, remember, these are new claims, right? If you guys are looking at these, this is going to be what, Thursday? Yeah, it's going to be Thursday, right? And again, this is the number of individuals who filed for unemployment insurance for the first time during the past week. Okay, the forecast currently right now, they finally put the forecast on, is supposed to come in at 3.5. Okay. This one, I would not necessarily be surprised. I think if the stimulus bill had kicked in 5 days sooner than it did, this number would have been a lot smaller, okay? And here's my opinion on this one. Again, this is not politics. This is purely just a financial opinion. Because of the backstopping the companies were given, right? They were told, listen, don't fire your employees, pay your employees. We will give you grants. We will help you bridge the gap to pay those people. But they become full grants. You don't have to pay back as long as you don't fire people. If you fire them, again, so they can get unemployment, then again, you need to pay those back. Those count as temporary loans. So there was a little bit of backstopping. Had that gone in a bit sooner, I think this number would have been lower. I actually don't know if we're going to hit the 3.5 this week. I know there's a lot more people that kind of, got laid off and things like that, and I actually know some people, close to me that actually got laid off last week on, Wednesday, Thursday, that again would have probably been saved had the stimulus kicked in earlier. But I don't know if we'll actually see the 3.5. If you think about it, that would be 6.5 million people unemployed in 2 weeks. Is it possible? Sure. I mean, with the coronavirus, things are definitely there.
But this is something that, again, I believe that the market has already factored it in. If you remember last week, if you were watching the markets, what happened? Well, we got that enormous 3.2 million unemployed people. Did the markets go up or go down, right? The markets had already factored it in, and the price actually surprised a lot of people. I thought they would actually tank much worse, but they actually held and went north, right? And again, markets had factored in ahead of time, and then everybody knew, hey, listen, we should short the market, and it went up. Okay, so again, it's the market still playing games with people, okay, you know, preying on that fear. And that's why I think it's very, very important to keep this in mind. And again, you guys can see, you know, since January this year, we've had steady, you know, employment really hasn't done much. A lot of these forecasts have been less than what was expected or right on. Going into second and third quarter, these unemployment claims are going to go in the complete opposite direction. They're going to be less and less and less and less and less for new people as the hiring numbers get better and better and better. Okay, that's where the market's going to get really, really fun, because we're going to see, again, very positive data. We're going to see the markets moving up again, and that's really where you're, again, that's, you know, look at some of the biggest kind of trades in history and where they've come from. You know, I mean, look at the last time we had a huge market crisis. You know, you guys remember, you know, I'll give you his initials, the WB guy, right? You know, he backstopped some companies, did some warrants when they were super low. He made a ton of money when those markets went back up again. That's where the money is to be made, right? A lot of people right now are focused on the fear and greed, but this number is a temporary number, and pretty soon this number is going to stop. Again, remember, this is first-time claims, not the second-time claims for people, all right? So that's important to kind of keep in mind. Again, I think it's going to be a rough number this week. I don't know if it'll get up to the 3.5 total that they're saying, and I also don't expect a huge market reaction. Again, we didn't have one last week. I don't know why we would necessarily have, you know, suddenly have another big number and have another huge one this week. But I will say, when this number goes down drastically, people are going to start looking to the economy much faster than you guys think. Okay. Now, let's talk about the central bank cuts, because this is extremely important. Okay. Typically, what happens, and again, if you're not a currencies trader, again, consider this a little bit of a lesson. Okay. What happens is when economies go down the hill, right? Countries, the central banks will typically lower the Fed funds or official cash rates depending on what the country is. And what that does is it makes your exports a bit cheaper. It helps stimulate, it kind of gives you a bit of a boost because other countries want to buy what you have, okay? Now, looking at these, obviously the Canadian dollar, they've gone from 1.25 down to 2.25. So again, a huge cut. Now, Canada right now has, and again, I'll cover this in a chart in a second. Canada's biggest problem isn't necessarily COVID-19 right now as a nation. Their biggest issue right now is the fact that oil prices are down close to that $20 mark. Okay, so that's really what's driving this rate. If there was no COVID-19 and we were still having this Saudi and Russian oil war back and forth, that rate would have come down no matter what. Okay, now they are an export nation. You'll see they've had some extreme weakness and extreme strength, but that's basically an oil play. Now, Australia and New Zealand. As you can see, Australia wasn't super high. They went from 0.75 down to 0.25, right? Over here on this right-hand side on the top right. Kind of a big deal, but that's purely been associated with China. Now, I don't know if you guys saw it this week or if you followed it or not, but Chinese production numbers, their PMI numbers from this weekend were better than expected, okay? They kicked in, what was that, on Monday night at 9 p.m., we had the manufacturing PMI and the non-manufacturing PMI. Those were forecast to be at the 44.9 and 44.2 areas respectively. They came in at 52 and 52.3, showing that they are having economic expansion already. So they are kind of through to the other end. They don't have anybody to buy their goods, but again, they are starting to produce things up, and they are in an economic expansion mode again, which will also help the Australian dollar and the New Zealand dollar. Okay, now again, New Zealand dollar is not necessarily something that we tend to trade with Nadex, but the Australian dollar, absolutely. The Aussie dollar and the Aussie yen are both very affected by that cash rate, as well as obviously the Chinese news. Okay, so again, that's a big drop down again. Okay, when everybody's basically at zero, there's no such thing as carry trades, and again, a lot of things are in the market. But again, it also shows you what gold is doing, right? Because again, we're talking about interest. Now, the bottom two are pretty important. Okay, Great Britain pound and United States dollar. Obviously, the Great Britain pound was not very high with Brexit. They had a lot of issues in that economy anyway. What's going to happen with trade? I mean, Brexit drug on. January, it finally kicked in, and it was kind of like, yep, Brexit is here, but COVID-19 is more important. And we just kind of forgot about, you know, the UK in general. They dropped from 0.75 down to 0.25, and then 0.25 down to 1.0. I'm sorry, 0.10. It's basically almost nothing at this point, okay? Kind of shows you where they are as an economy. And again, they also have a little bit of exposure to oil. If you guys remember, you know, what BP stands for. is British Petroleum. So they actually do have a little bit as well, not quite as much as the Canadian dollar, but they do actually have a little bit of exposure to it as well. Them staying low is actually pretty important. As they get kind of their economy righted with the whole Brexit situation, we were waiting to hear some blockbuster trade deals that the Great Britain nation economy had with other nations, but everybody is so focused on themselves right now, we didn't hear that. For me personally, I actually think there's going to be a kind of a bull market with the pound, just because once those trade deals come in place, everybody's basically at rock bottom right now. I mean, the pound was definitely at rock bottom because of what was going on. They were breaking up their deals. The economy was bad. The government was funky. I mean, all kinds of stuff was going on. They were basically at bottom, right? You know, not as far as a price level goes, but their economy more or less was like, listen, we need to jumpstart it. We need to, you know, put the plugs on, say clear, and let's get moving. But now everybody has also been drugged down to that same point. The fact that they were already there, they've taken the measures to start kind of that kickstarting process, I think, a bit faster. So I think that we could see later on this year, the pound actually having a pretty positive time. Now, the United States dollar, as you guys all know, we were at 1.75. They made that emergency rate cut on March 3rd, dropping it down to 1.25. Kind of surprised they cut it as fast as they did. And then March 15th, 2 weeks later, they did the same exact thing. Again, another, basically a huge cut, right? So we went from 1.75 to 0.25 in less than 10 days. Now, you guys just saw the numbers. None of the numbers necessarily justified this. This was purely to help keep the economy running. But there was no problems in the economy yet, okay? At the end of the day, how, and again, I want you guys to answer this question yourselves, how does that Fed funds rate affect any of you right now? And the answer is it's probably not, right? You're probably not you're not probably refining your mortgage, okay? The economy obviously is kind of still somewhat high, right? We're not collapsing through the floor. This may have saved us a little bit, but what's the biggest problem with having our interest rates this low? It's inflation, okay? So this is extremely important, and this is part of the going forward process. We cut the rates faster than we have ever cut them before. Huge, huge cut in less than 2 weeks, gigantic, right? Well, China has already passed, they're past COVID, they're moving forward. In June, 2 months from now, when we are now past it and the economy is great, we have to make sure that inflation is under control. It's one of the mandates of the Fed. Are they going to jack the interest rates on us 1% at a time? Or are they going to let the economy run hot and start getting some inflation out there? If people aren't working and people aren't back to work yet, is inflation going to necessarily be a good thing? No, not really, right? So they're going to want to avoid inflation, and the way you do that is by raising interest rates. So this could be a potential landmine that we could step on as far as traders go when they start doing, again, rate cuts at the same extent, because they're not going to do it at 0.25 and then wait 3 months and then do another 0.25 and then wait another. I mean, come on, you guys cut it, 1.5% in 2 weeks. At the same time, when this is over, they're going to have to raise it, I think, at the same rate. So that's going to be something I'm keeping a very, very close eye on. And a lot of people don't follow FOMC notes. Now would be a great time if you were home to be following FOMC notes. Okay. Dropping down, let's talk about gold. So gold is a big thing when we're talking about interest rates. So this is the year to date on gold. Okay. Now what I'm going to do is I'm going to kind of run through, and then what I'm going to do is I'm going to pop up a chart and we're going to kind of look at it real quick. But first quarter stats, the blue line here in the middle, guys, that's where the year started. That's where 2020 started. As you can see, gold's been pretty volatile, right? Before COVID kicked in, again, the high in gold was on March 9th. Nothing was going on. Unemployment rate was down. Jobs were at all-time highs. I mean, we were just gangbusters, right? As you can see. And then all of a sudden what happened? Bam, that thing slammed right down. But wait a second, they cut interest rates, inflation, why did it go down? Right? The stimulus bill has obviously popped it back up again on a daily basis. But what's going on here? Why is gold, I mean, what's going on here, right? Well, gold is one of those plays that's a hedge for inflation. But if the economy is bad, people aren't working, inflation doesn't exist. And people are like, oh, go here to protect from inflation. But you got to think about the environment, right? This is something that we've never seen the likes of before. And if people are not working, people are unemployed, people are getting checks from the government that aren't taxed, there's no such thing as inflation. Gold may not necessarily be the hedge that a lot of people think it is, okay? Now, again, it's lost $250. The high was up over, 1704 down into the 1452 range. There's, besides last week with the stimulus news, I've actually been more bearish in gold than anything else since that peak. Again, with the economy the way that it is, I don't think it's time to get long there yet, and I'll show it to you in the chart. So I'm going to run through these charts first, and then we'll run through the live charts so you guys can see them. Here's gold, but you guys can get a good graphical representation. FYI, where it was bouncing was actually a great little area to buy, okay? And I'll show it to you in the charts, all right? Now, looking at oil. Now, this oil chart is slightly off. This is actually through an ECN broker, not through a futures broker. So I know that price did drop down to the 19s. The charts look very similar. I actually had a buy zone down there. But I'm just trying to give you a graphical view of what oil has looked like, right? We've gone from the high, basically starting on January 8th, up in the 64 range. And we've dropped all the way back down into the 20. Now, I know it dropped down to 1960. It was actually an area the ECN broker didn't actually recognize it as kind of it was a short spike down, so it didn't recognize it here. This one has the low right now at 21.91. I know it went a little bit lower, but you can get overall look on this one. This is a story, kind of a tale of two stories, right? One, COVID, okay? We knew that demand was going to be down. China was not purchasing in that. That was one of the big purchasers out there, and that's really what started this decline back in January, okay? Now, did a lot of people kind of see the trade war coming into this all at the same time? The answer is no, but the end result was the same. Oil was collapsing through. It's basically at lows. I get this question all the time, how low could it actually go? And I'll show you in a chart in a second, but my opinion is I don't think it can go too much lower. I know there's been statements made by the Saudis. They'll take it down to $10, and they can maintain that, for a year and a half to put everybody else out of business. But the thing is, they would be bleeding so much money at the end of that time frame. I think greed would get the better of them. I just think there are too many countries that lock them down, throw tariffs on them for manipulation. OPEC is not the kind of force that it used to be in the past. And at the sake of some of the larger companies, I mean, think about it. The financial services industry crashed, and what do? We backstopped them. If you guys don't believe that Exxon has a lot of power in the government, you guys are missing the boat there, right? With it this low, Exxon profits are obviously going to go down. So again, those are large companies, employ a lot of different people. Solar, I laughed at the stimulus when they're talking about solar credits, because with oil at $20, what type of solar credits are there going to be? What's the need, right? Solar is too expensive still, and it's going to actually hurt companies that are relying upon solar. Electrical, fine, but solar in particular with it this low. And I don't see this one necessarily coming up too soon. And again, we're so far from price at this point from looking for great shorts. This one, again, this has been great to play intraday if you guys are playing oil. And again, you can play this one on Nadex. So dropping from oil. Okay, so let's look at the NASDAQ. So the NASDAQ ended up hitting its high on February 22nd, and we hit our low on March 23rd. Again, COVID was here. Again, we started to see kind of the rumblings of how bad it could actually be. As you can see, this one has actually had a pretty healthy decline. Okay, we're seeing impulse corrections move, and coincidentally, I don't have it marked off on this one, but it actually bounced off a daily zone when it actually did take its bounce. Now, with the stimulus put in and everything else we've seen, I actually believe we have one more push to the downside. I do believe personally that we will break, and again, this is not Nadex, this is my personal opinion. I do think we will take one more stab lower. I think we'll get to it probably mid-May, or maybe even towards the June timeframe before it turns. I think, although we know that the numbers are going to get higher and higher and higher because we're obviously doing more tests and just the natural spread of the virus, I think fear will continue to grip, and I think things will get even lower. I don't think we're at a position yet where the worst is here, so I do believe we will come a bit lower. But on the intraday basis, there's been some great buys in this one. This week, last week when we saw the unemployment numbers, the market popped. This week, maybe it could pop as well. We got to kind of see where it's going. But just to get a graphical representation, again, large move, 3,141 from top to bottom. A lot of movement in there, but I do think we will test that bottom yet again. Looking at the Dow. So the Dow didn't have the same pop. And again, I'm going to go back one slide. You can see the NASDAQ. We were continuing to drive forward, right? We were continuing to drive forward from January 1, the blue line, until we hit the high. The Dow, not so much. It didn't necessarily have the same type of power. There was more exposure to overseas, and these industrial, industrial companies, the Dow Industrial Average, they were actually seeing the writing on the wall before other people. Okay, now this one has had, a real big gap in there. We've seen kind of, actually many gaps. We've seen some basing, some really big pushes away. Again, also bounced off a few times, actually, a few different daily levels. This one actually popped right off those levels. Again, I see this one actually going lower as well. Talking to a close friend of mine, and he was like, yeah, I can see this coming down to 16, which for me, I was like, 16? I got a zone there, but, and again, that was one of those kind of later in, probably the middle of next quarter is where we were kind of talking about that one coming down to. So something to keep an eye on. Now, S&P. S&P looks more similar to the NASDAQ. Again, we were driving. We hit February 20th. Obviously, COVID was here, and that's where the downfall happened. Now, again, we had an immediate gap, an impulse correction move, and again, continue to drive took that bounce, right? March 23rd. Again, you're talking about, you know what, a week ago? What happened, right? Well, we had the stimulus go in, but again, the stimulus is only going to go so long. The stimulus will probably run out. If the job, if it's spreading, and it sounds like it, we're seeing numbers spread even more. What's to say we're not going to need another round of stimulus? I highly doubt getting a check for 1 month is going to make everybody's bills perfect. Again, the social distancing, if they really want to get this, if they're really going to focus on it, I think that this is going to continue to push down a bit lower. And again, I'll show it to you in a chart for there. Now let's go to the currencies real quick. Euro dollar, okay? Euro, interestingly enough, you can see where we started, where that blue line intersects the chart. We're actually not that much different, and actually, basically at the end of last week, we were more or less where we were, right around that 111 feature. Now, for those of you that say I just trade indices, or I just trade oil, or I just trade gold, again, I want you to look at the opportunity over here, okay? March 9th to March 23rd, not only did we drive extremely high into a selling zone, what did it do? It literally fell off a cliff and dropped all the way to the downside. Now, this is 860 pips from high to low. This is an absolutely huge move going from 114 down to the 106 area. If you're not taking advantage of this market, shame on you, okay? This was an absolutely huge move, and I think this is going to continue for a little bit longer, all right? And again, just in that time frame, Europe's no better than we are right at this stage. Lots and lots of movement, and again, there's been a lot of push towards the US dollar. I see this one, again, I was even mentioning we could potentially see, parity at some time this year, because I think we will come out of this stronger than Europe necessarily will. Again, giving us some more dollar strength to the downside. Now, looking at the pound a little bit different. It did not have the drive up. It literally went across. Again, the pound was having some problems. It was having some weakness, and then bam, it just collapsed back down again. Obviously, the retracement last week was because of the stimulus bill. That's why you're seeing those big candles. But you can see this one was a little bit more leveled off. We didn't necessarily have the boom. We just had more of the kind of the sideways, the indecision, and then the busting cycle. Now, this being down at the 114 range is rather low. Even 123 where we are right now is quite low. If you're looking at it today, it's only moved about 10 pips in the last 24 hours. Okay, this chart was actually taken from yesterday. It's only moved 12 pips. So it is actually starting to consolidate back down as the craziness is out of here. But as I mentioned before, I do see the pound again getting some strength. I think they're going to do better than Europe. Whether they're better than the United States as far as the recovery effort, as of what they're capable of doing, that's the big question. But again, this one has also been quite tradable on the lower time frames, and there's a few different pairs that we can trade on Nadex for this one. Okay, for those of you that are not familiar with it, again, go check that out. The euro pound is in here, the pound yen is over here, and the pound dollar is over here. And again, you can trade it not only in the 5-minute realm, right? You can trade it in the 5-minute realm, but you can also trade it inside of the touch brackets. The pound dollar is one of the 4 touch brackets, as is the euro dollar, but the pound dollar is one of the 4 that you can trade as far as that goes. All right. Dollar yen. So dollar yen is more similar to what the U.S. economy is doing, and it typically tends to track with it. It's just kind of an inverse of it. As you can see, it looks like the euro. We were very, very high. We are very, very low in a very short period of time. And then what do? We went all the way back up again. We slam right into a daily selling zone and turn and flip right back down again. We are technically just slightly lower. We opened the year at 109.17, and yesterday we were at 107.95. Yesterday was still a big day, and again, you will get big days in this one. But right now, this one has moved 11 pips to the downside in the last 24 hours. So it's starting to come back into where it's supposed to be, okay? And again, I'm going to show you some charts that have ATR on there, and I'll show you what that, again, extremely important to kind of follow that on the daily basis. But again, this one, to me, I still think we are kind of in a shorting situation here. It did take that big bounce. It did have a great area that it hit off of, and for me, I'm a bit more bearish this one right now. But again, 1,106 pips, right? In less than a 2-week period of time. It's absolutely huge movement, and a lot of people, like, I don't understand it. Focus on the chart and trade it that way, right? Dollar CAD, I mentioned this before. So dollar CAD, this has literally been straight up. And what is this? This is the exact inverse chart to what oil looks like, right? As oil prices went from 64 all the way down to 20, what is the dollar CAD doing? It went all the way back up again. Now, oil has more or less stabilized in that, $20 to $25 range. It's kind of kicked back lately. And again, that's kind of what has put this peak and kind of this tracement back to the downside, right? I do think that this will continue to push higher. I think we will come out stronger than Canada will. I do think the oil drama will probably go a bit longer, right? Maybe the president can have this discussion with Russia and Saudi and be like, hey, listen, let's fix this. Let's bring it up to $35 or something like that. That would obviously help the Canadian government. But until that oil demand is back, oil can remain low. The Canadian dollar is going to continue to suffer. Okay. So why, looking at this chart, I would say, hey, listen, we are kind of in a bit of a retracement time right now. I do know that it bounced off some levels in there. And again, this one from high to low, 1,712 pips, 1,712. Okay. And that happened from March to basically from the low on January, basically where we opened till March. And that's an oil story, exact inverse. Aussie dollar. So the Aussie dollar kind of has been following, this is more, it would typically follow gold, but you can see what it did. Okay, the high of the year was January 2nd. The low was on March 19th, that March 19th, March 20th time frame. And you can see it just continued to drop. Now, if you guys remember when I talked about when the rate cuts kicked in, right? The rate cuts kicked in on March 3rd was the first day. And March, what was it? I had it written down. March 3rd and March 15th. But yet you can see the low here was down on the 15th before it started to push back up again. So even though it will typically track with gold, you can see that this one has been weak. Now, this is a Chinese story. Again, the Chinese government is a big purchaser of commodities and natural resources from Australia as well as New Zealand. And that's really what started to drive this. And then gold became a story. But with the Chinese production coming back online, not only will they need natural resources from Australia, they will also start buying gold from Australia, because gold is, obviously Australia is a big exporter of gold. Why? Because it is also an industrial metal used in electronics, and a lot of electronics. So again, this one, I actually see some strength coming back into this market. Don't know how fast they're going to raise interest rates, but again, pretty nice one to kind of pay attention to for a number of different reasons. All right. So with that said, let me jump over and let me go through these real quick. All right. So for those of you that don't know, again, why I'm talking about this right now is I want to focus on this number, this kind of line at the bottom, and hopefully you guys can all see this one. This is a gold chart, okay? Things that I'm looking for right here is I'm kind of looking top and bottom wise. Now, I'm looking for zones up here, and I'm saying, hey, listen, if price comes back up here into 1679, last time price was up there, it was forcibly pushed down. The market was great, but yet it was forced back to the downside. Now, I am going a little bit higher on some of the, for the other ones. I'm going back to a weekly. And for me, weekly areas, I'm looking for zones down here as kind of a top and bottom inside of the market, okay? Last time price came down on a weekly basis, you can see huge drop down in 1 week, huge drop down again, and then stopped on a dime, and look at the response rate from that area. And that area kicked in at 1466 down to the 1445 range. Again, we can go back down to the daily, you can kind of get a better view of it. And we could probably shrink it just a little bit. Again, it's drawn off this candle, but we could shrink the area a little bit. For me, those are what I'm using for top and bottom. But really what I want to focus on the most is this is the ATR down here, okay? This is a 14-period ATR. It's one that many people use, as you guys can see. The normal movement is down here. It's about $15, $16, okay? Right now, inside of this range, you can see they were up here in the $60 range, okay? But, and I say but, what are we seeing the last 5 days? Okay, this is why I want you guys to pay special close attention to this one. Okay, going back 14 days, that puts us right about here. What's about to happen to the ATRs? This large candle is going to be removed. This large candle is going to be removed, and then this large candle is going to be removed. This is starting to get back to normal trading. Okay, so the way that you guys trade this is, again, you don't focus so much on the daily. We do have our tops and bottoms, but what you need to do is go back down into these lower time frames. Okay, again, 30 minutes and 1 hour has been really great levels. And again, you guys can see it's been pretty decent, right? We've had some pops here, pops here, pops here, pops here. I don't currently have the, there's indicators that I use on this one for supply and demand, but you can see this one has been great on the lower time frames, okay? And again, we've stayed more or less inside of the channel, kind of moving sideways, but great sell zones in this one. And looking to the bottom, again, this is what I want you guys to focus on. Look to the bottom. We have an area right where price is right now. You can see that it's had some issues, right? It's hit and popped, hit and popped, hit and popped, hit and popped. Now we're coming back to that zone again. So in the near term, you guys got to be thinking, hey, listen, is there something down here? Or should we be expecting a pop, or is today the day we're finally going to break that zone and start to push back to the downside? And for me, there's a lot of drama in here, a lot of wicks, a lot of indecision. I'm actually looking for price, if it does falter, to come back down here into the 1556 range, okay? So that would be gold. Oil, okay, and as I mentioned before, this is based off of an ECN pricing. I know that it went down to 19. This one has a low of 2030. But same thing, same kind of discussion here. We've kind of bounced around, and I'll show you to in lower time frames, but look at what the ATR is doing. You guys can say normally it stays in this range down here about $1.50 to $1.60. Because of these large moves and large gaps, what happened? It shot all the way up to the $5 mark. Again, it's 2 to 3 times higher right now, right? It's up at $5. It used to be down at 150. But what's happening? We're starting to have more day consolidation. We're starting to have this come back to normal. So again, what you need to do is make sure that you are not taking overly risky trades, assuming that we're going to have $5 ranges, right? Because that's what we've had the last 2 weeks when we're coming back down to what normal days look like. So you need to show, going forward the next 2 weeks, you need to focus on lower risk. And again, for this one, in oil, kind of the same idea. There's been a lot of these lower levels. You can see we had a pop here, came right back up into this basing level. Again, last time price was up in this range, you guys can see it was turned away and then boom. And again, we got front run and another push. We are coming back into a gap right now as well. So again, oil is one of those ones on lower time frames. There's been some great little setups. Like I said, I don't have the indicator on here right now. I'll put it on there real quick. You guys can kind of see it. Load some data into it. As you guys can see, there's some zones in here. And again, let me back test. Go here. We'll go back and you guys can see in this range right here, this is kind of what we had. This is how we started the week, basically. Okay. Even if it's going over the weekend, this is what I wanted to show you guys. Pop that off. Here's where we ended Friday. We had a huge gap to the downside. Again, we were back up into the 23 range. We went all the way down. We opened at $20 and then we continued to push lower. This is a 15-minute zone from last week, and you can see what happens is these are bouncing, right? Bounce, came back up again, formed new levels. Almost got it again, came up. I can go over here. You guys can see we hit it again and bounce. After it hits a number of times, it's going to break through, and that's what we eventually had. So the same way that we have this forming here, okay, now we can start focusing on not only this lower low down here, but we also have a range of a gap right here that we're starting to get close to. So oil traders, take note, okay? Tomorrow, we have oil inventory reports. That's going to show us a little bit more about what the demand is currently right now. And I don't think actually, let's see, do they have the inventory up yet? Let me see. I'm going to see if they have it real quick. Oil inventories, yeah, right now they're saying we have a surplus of 3.2 million barrels. Because that unemployment rate was so high, they've obviously adjusted this slightly. Question is, if we have another one, what's that going to do to oil? Because if there's not demand, if you're not driving cars, the demand is not there. Okay, obviously they're shutting the oil spigots off, but with it this low, again, the supply is increasing. We may get some pops off some of these lower time frames. So again, keep those in mind. NASDAQ, okay? NASDAQ for me, again, here is it on the daily. And again, you guys are seeing kind of a peak right here, right? Go 14 days back. 14 days from here backwards is right here. This green bar. Okay, well, if this gets taken out, okay, this gets taken out, great. So that would be Wednesday. Here's the Thursday candle. Here's the Friday candle. This big spike down, hit a daily zone, and then pop back up again. When these come out, is this going to get more back to normal? What will that do to the ATR? Okay, when that ATR starts to shrink, the volatility will go down, the bid-ask spreads get smaller, and the strikes also shrink as well. Okay, so that's an interesting time. Now, again, 30-minute, this is where I've been playing this one, the 30-minute and the 1 hour. Okay, oops, not that one. I wanted to click that. As you guys can see, we had a pop down here on the open. Well, guess what it went off of? Again, finding these areas where price has found support in the past. This was a great little area. We opened, we hit, and then boom, off to the races. Now, we've pushed a little bit higher, okay? Pushing a little bit higher is one of those things. There's not a lot of levels up here. An area that I'm looking for right now is based off of this gap, okay? Now, we've seen price test it one time. That level for me starts over here at 83.92. Okay, if we get up into that range, I am potentially looking for some type of a short position. But even on the 4 hour, you can see we had a peak over here, and the 4 hour levels are starting to come back down again with inside of acceptable ranges as well. But seeing this craziness over here, I don't really have a whole lot looking to get short up top. I do like the bottom that it's put in. I do think we will get a little bit of a bounce. And you guys can see right here, that was the bounce that we talked about earlier from Sunday night. Okay, so NQ, again, this one's been fun to trade on the lower levels. I don't have. I should probably just drag the indicator in for all of these, so it's there, from the get-go. All right, but those are some of the levels. You know what? I'll do it on the next one. Okay, so let's go to the Dow. I'm just going to drag it first things first. We'll drag it in. All right, so on a daily basis, okay, go to the weekly and daily. You guys can see the top and the bottom. You can see this enormous spike, huge candles. Obviously, the volatility is completely jacked up right now. It needs to come back in order, right? So on the 4 hour, you can see right now we are actually sitting inside of a 4 hour zone. It was an area that we had marked off before. In this case, it was kind of like, are we going to go short? But how much power, how much potential could we push out of it? Right now on the 4 hour, it still looks like it is holding. The zone has been pretty good. We've actually moved out of it, but it looks like we have some buyers stepping in here at 21,289. So again, maybe a bit cautious on that one. I would say it's more sideways than anything else, waiting for some of those big numbers. This one is going to get a little bit busier. You guys will see there's many buyers in here. Here was kind of the, again, buyers here, buyers here, buyers here, buyers here. So we're seeing a lot of green, a lot of buyers on the downside. Obviously on the top side, again, using price action, there's actually two different levels. There's one here that's been tested. This was kind of a near-term high that we had back on Friday. It was tested immediately and then front run pushed down. That's what it's bouncing off of. You can see it on the daily. Kind of looking at that as kind of a, hey, listen, we've hit, we put a lower high in. Is this starting to get bearish? You know, are we going to continue to push to the downside? And again, for me, any type of profit targets on this one, it looks like we're going to run into some problems down here at the 21,427 area. Looking at the S&P, kind of the same idea, right? Kind of big bounces to the downside. I will drag this one on as well. A couple things I wanted to show you in this one. So all these big spikes, same idea, right? Now let's see it. Load data. You guys can see. Here were some of those large spikes that we talked about. There was a spike here, again, big push down, hit and pop, right? There was another one where we popped here and went up, and then there was also another one right here when we popped. So this one has been bouncing first time off of levels that have shown us where there's been buyers in the past, but a lot of those have been eaten up and we've been pushing to the downside. So for me, I'm actually looking for a bottom in the market, right? If we get another push to the downside, I'm actually looking for a bottoming of the market, potentially over here at this 1880 range is where I have a level. Obviously, we're a bit higher than that right now. We're at 25.98. You might, oh my God, that's huge. But you guys can see, just take one of these candles, take one of these crazy candles, right? I just painted it right there, right? Look at that. It's actually down to that area. So if we have any type of craziness, we could potentially be getting down to there. But for me, that's kind of where I think the summer bottom will probably go down and hit to. On the, you know, in the intraday stuff, again, there's obviously, you know, plenty of things in here that we can trade on the intraday. Again, there's a zone sitting right up here. We haven't quite got there. There was this kind of front run position. You guys can see kind of the same idea, right? We went just slightly higher than that zone, but again, still sitting up at the upper ranges of that level. Okay, kind of. Again, for me, it's telling me that we're going to have more intraday shorting for the rest of today. Just my opinion. And areas we're going to probably have some issues on the bottom are most likely down here. It looks like 15, 17 is probably a range that you want to be cautious of as well. Now, again, remember, don't take any of these trades based off of what I'm saying. Make sure you do your own analysis and have it match your own strategies, all right? Looking at euro dollar, okay, euro dollar is, I spent a lot more time over here. You can see the enormous movement. Now look at the ATR. This is what I'm talking about right now, about being cautious inside of the market. The normal ATR for a pair of this is about 50 pip movement is what we were dealing with, 50 to 60. Right now it's up at 192. So there's a lot of movement on this one, right? A lot of movement, okay? Now you're seeing there's been some great little zones. Again, little basing level here, came up and snagged it. This one has also been great to trade on an intraday basis. Now, I know a lot of you are not necessarily day traders, or you may feel very, you know, a higher level of risk for day trading. But one of the advantages to actually looking at these things on, you know, an intraday basis is the fact that you typically have smaller risk on a 30-minute chart or an hourly chart versus using a 4-hour daily or weekly chart, right? Obviously, with the ATRs being very, very high, the amount of movement, your levels of risk will typically be bigger if you're using price action on these bigger time frames. But because the lower time frames are starting to come back down and start to create smaller candles, which are a little bit more normal, you're able to get some pretty nice little setups on this one. So, you know, as far as the euro dollar goes, let's bring these across. As you guys can see, there's been a couple little front run positions that we've gotten close, a little tests. Again, this is using price action, guys, if you're understanding how to read candles and using supply and demand. Nice little kind of runs back and forth. You know, for an example, you know, a risk in this is about 11 pips. Okay, very, very small. Nadex, you can trade this through binaries, 5 minutes, touch brackets, call spreads, knockouts. You can do all of them, okay? The euro is one of those Nadex pairs that you can do a lot of stuff on it. Now, be a bit cautious with the spreads kind of, you know, again, the ATRs being high. The strike differential has widened just slightly, but they're still very, very tradable. And for me, I'm loving the lower time frames on this one, okay? Pound dollar, kind of the same situation. Again, you guys can see it here. Let's stack this in, and we'll load some data to the downside. Now, this one you can see is kind of a bit opposite. We've actually been bouncing off of a level, showing a bit of pound strength dollar weakness to the top side. But there is sellers right above this area, so I'm kind of cautious of you know, what it's looking like. But same thing, this was the Sunday night gap. There was actually some great trades off that Sunday night gap. We initiated, went down almost all the way. I'm telling you guys, it doesn't matter what you're trading, whether it's indices, forex, gold, oil. A chart is a chart is a chart is a chart. They're all formed using buyers and sellers and, you know, confirmed orders. Again, we've kind of put a near-term high in, and we have sellers to the downside. So again, learn how to use these currency binaries if you're not, you know, currently trading them. Honestly though, touch brackets have been the favorite because the premium is not as high right now. So again, make sure you check that side out as well. But I do like this one. Again, this one looks like you're going to continue to push to the downside. But big areas for this one that I'm worried about, there is some sellers sitting right here. But besides that, remember before I talked about the pound strength can head all the way back up again. And again, up into the 131 range would be kind of the next time where I'm thinking big sellers are going to come back into the market. Looking at dollar yen, again, high, low, all the way back up to the high. This one actually hit a daily zone up top. You guys can see it right here. This was something that we had marked off weeks ago, right? Weeks ago. When we put that in, you guys can see that was what we were looking for. There were some amazing sells off that area. Dropping into the lower time frames, you can see we have some, you know, there's another level in here. There's some lower levels that we are looking for, but it's kind of bouncing back and forth, waiting for it. Kind of some more data. This one, we will see some movement off the unemployment numbers later this week. The reason why, obviously, that's going to affect the overall stock market. It's going to affect the dollar, and the dollar yen tends to be one that is, you know, particularly sensitive to it. Okay. The way that I like to play it personally is I'm waiting for it to come up into these zones, and I'm looking for it to approach those zones before news. Okay, before news. Now, if you guys have listened to any of my news breakout strategies, you guys will know why I like things coming into supply or demand areas before the news, because the markets tend to be kind of, again, manipulated slightly. Price tends to push into those zones before the actual news release, you know, so big money can kind of control them. So again, something to focus on. Okay, dollar CAD, you guys can see the high movement on this one. For me, in this one, again, kind of the same idea. We do have an area of sellers up top, sitting up here in the 144.93 range, and again, comes up to 155.53. Right now, I'd say we're looking for some orders. Again, I think this one is going to be affected the most by oil, which will be tomorrow. As you can see, nice little pop into a small zone and continue to push down. I do have this one kind of boxed off, though. I do think buyers will step into this one at the 140.48 range. So just be cautious of that one. And again, you guys can see the ATR on that one is very, very high still because of all these candles. And again, give it a couple more days and these big candles start wearing out, the ATR will come down lower and again, make it a little bit easier. Now, Aussie dollar. Aussie dollar is the last of the currency pairs. As we mentioned, oil story heading to the downside, Chinese demand gone, COVID dropping this down, a little bit of a stimulus money, and now we're kind of turning and flipping. As you guys can see on gold as well, I've been more bearish gold in the near term, as you guys can see on the 4 hour. It's been kind of stuck, right? It's been kind of bouncing around the same level. We've had this bit of a gap. It went slightly higher, right? And then kind of immediately pushed back down. So for me, I kind of have a top and a bottom. I think we're going to need a big number to kind of have this really kind of break free of the zone. And again, on the 30 minutes, really not much on the 30 minute, but biggest thing on this one is look at the ATR. Okay, the ATR is finally coming back down again. You know, again, we're starting to see a pop here and go 14 days back on this one is right into this range. We're starting to get rid of some of these big candles. Okay, these big candles come back down. This starts to shrink, just like with gold. As you guys see, this one, guys, used to have an ATR of about 45 pips a day. Now it's up to 219 pips a day. So a lot of movement because of what's going on, but that will start to shrink back again and also make this a little bit easier to deal with, right? Now, with that being said, that's the last of the kind of the analysis there. Okay, let's talk about the notices. Okay, if you guys are unfamiliar with what notices are, the way that you find them is you go to this nadex.com/notice. Okay, there are a number of different things you can do it based off year, based off different types. Let me actually let me suck in this browser. Okay, again, use the drop down, use the notice type, and the reason why I'm telling you to go here is because things like this. Okay, during this time frame, as you can see, because of the increased volatility, certain strikes have actually gotten larger. Okay, if I click the PDF file, you guys can see here for the week of this 23rd, you can see what the normal strike width is, and they've adjusted it. Okay, you want to make sure that you guys have the correct kind of, I don't know, game plan going in. You need to make sure that your risk levels are matching up. This is brand new. This just literally came out. And again, this is a great sheet. Make sure you print this out when you're doing all of your strategies. Particularly, again, I'm a big believer, and I absolutely love, without a doubt, the 5-minute strategies. But it's important to know that the pound used to be, 2 pips, and now it's 8 pips.
All right, it's important to know all these things. This used to be half. For the weekly, it's doubled. So a lot of these have adjusted. Make sure that you guys are keeping aware of these. All right. Now again, the way that you find these is go to nadex.com notices, and then I close it down. But what you do is go to this website, go here, and start reading these. Okay, these are the things that I was talking about, and it's important to keep that risk going further. The reason I showed you all those ATRs exploded, that is why the strike differentials have widened. They will go back down again. When, I don't know, but the first sign that that's going to happen is when the ATRs shrink back again. So for your trading, make sure you are aware of the risk before you get in any of those positions. As I said before, as far as a summary type goes here, I do think that we will get a little bit worse, but then I think we will get exponentially better. Okay, I'm hoping that when we get a little bit worse, it's a little bit more of a grind, shrink things, makes the strike differentials get closer. Again, those are the fun types of things to trade. All right, so what I want you guys to do is right now mark your calendars off. Some of you may or may not already be registered going forward. Mark off next Tuesday, April 7th at 12 p.m. Eastern. I'm going to do, instead of just a kind of review session, it's going to be nothing but analysis of what we see in the markets and where the potential trade setups are going to be, as well as I'm working on kind of what I would call it, as you guys saw before, I am trying to work on a COVID-19 assistance effort. You guys will hear hopefully more about it next week, but mark your calendars and make sure you guys get registered for that one next week. All right, so that being said, if you guys have any additional questions for me, you're more than welcome to touch base on the website. You can email me directly, check out the YouTube channel. I do live broadcasts every night for overnight trading on side of my Twitch channel, as well as we post some trades and things like that on Facebook and Instagram. All right, but like I said, use the old school method if you want. Social distancing, email me at support@keeptradingsimple.com. Thank you so much for joining us today. I hope you guys got something out of it, and hope to see you guys next week on April 7th. You guys take care and have a good day.